You wanna grow and go and get there. Sometimes upward, sometimes nowhere. You've got the ideas, you're looking up at the clouds, but how do you start standing out of the crowd? So build it with us from the ground up.
Hey everybody, welcome to From the Ground Up. I'm Zach Conway. I'm here with Kelsey McKenna. And Kelsey, I'm super excited about a very special guest today. I'm really excited in part because my 7-month-old kept me up most of last night. So I think this episode and having this conversation is going to keep you awake for the rest of the day. That's keeping me going. But I want to tell just a quick backstory on how we met this person. And it goes back a couple of years ago to, I'm trying to start a company called Seeds from the ground up, as the kids say. And I knew I needed to find outside capital to really build the company. So I was out in the market trying to pitch investors, and I had convinced myself, or somebody had convinced me, that I needed to find traditional VC, like sort of the Silicon Valley brand name venture capital firm. That was going to be the first marker of success, to go find a firm that would be willing to invest in the company. And I was really spinning my wheels. I started to get pretty jaded in the process, and I had never done it before, right? So I was kind of learning as I went. But I had this like obvious epiphany pretty long way through that journey of a lot of these firms don't even know what RIA stands for, right? They don't necessarily even know the space in which we're trying to build. And obviously we're biased, but we think there's so much business opportunity in this industry and in wealth tech, specifically within wealth management. And so we're kind of getting bummed out. And then fortunately, I met this guy, Michael Batnick, and we started to have these dialogues. And I think Michael was sensing kind of the same thing. Like there's all this opportunity in this space. We're both from the industry. We're both advisors. And why aren't people really putting money into this industry? And I think those guys, Michael and his peers, were like, why don't we just do that? Why don't we start a fund called the Compound Capital Fund and start to invest in the space that they know so well that will hopefully be have wildly successful companies, hopefully one of which is Seeds. But we're proud to say that they then decided to invest in Seeds. And so we've been partners ever since. But with that, Michael, welcome to the show.
Thank you for having me. I realize that we've known each other for a while now, but do I really know you? We haven't even done a podcast together yet. I feel like you don't really know somebody until you're on mic with them.
I would say, or until you do the research for the podcast episode. So I was doing deep dives on you, Mike, last night, and really kind of, you just did an episode, Jill, on money, which is a podcast. You guys are sort of the platform underneath, and listening to your origin story, your personal story, which I want to touch on maybe a little later on. But yeah, it's good to see you, and we're excited to kind of deepen the conversation. But again, premise of this whole podcast, and we've talked about this offline, is it's really hard as a business, but specifically as an advisory business, to get all the things right that you need to get right to create initial growth, to then create scalability after you create initial growth to make sure you can sustain whatever existing client base. And then to try to get to the next level of growth, so many sort of foundational elements of the business you guys need to put in place as an advisory firm. We needed to do it in our advisory firm. And I think a lot of people know you based sort of through the lens of your footprint, your media footprint. You guys have created such a media profile in you host 2 very successful podcasts, or maybe more than that. You'll correct the record, but Animal Spirits with Ben Carlson, Compound and Friends with Josh Brown. But you're the managing director of this wealth management business called Ritholtz Wealth Management. It's sort of your day job behind the scenes, and you run it with a bunch of very talented people. But that's what we want to dive into. We want to kind of hear from the inside, as you guys at Ritholtz, since you've been at the company now for a decent amount of time, what that growth looked like initially. And then take us sort of into the realization moments you guys were having internally, like the oh crap moments of, we really need to do this, 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 and this to make sure we can sustain, and then to make sure that, you guys can actually get to the next level of growth. So try to take us sort of on the inside of those conversations.
I'm really excited to talk about this because 99% of my time on mic, in fact, let's say 100% of my time on mic, is talking about the economy and the market and fun stuff that we're seeing. But I actually do have a day job, and I'm one of the 4 founding partners of Ritholtz Wealth Management. We started in September 2013, and it's been a long journey. So Josh, Barry, Chris, and I were inside of another RA in 2012 when we started working together. And we were all doing everything. It was just four of us. So I was doing trading. I was doing billing. I was helping out with research. And when we left, oh my God, I'm thinking, I'm thinking back when we left and started our own thing. We lost our biggest client on the first, like literally the week before we left. So I think we officially brought over like between 60 and $70 million worth of assets. And we're over $4 billion today. And it's been a lot of hard work. And I promise you, that is not because we're good at content. Well, okay, part of that is because we're good at content, but you don't build that sort of level of trust with as many households as we do because we are just good at content. That's what gets people in the door. But then we actually have to deliver the goods and competence. And I can tell you that our internal engine, what the public has no vision of, is every bit as strong as the content machine that we've created. So when the four of us left, we quickly realized, holy cow, we need a professional CSA, a client service associate. And we got beyond lucky that we found Erica Mora, who is the best in the business, like bar none. So later on in our, I'll jump around. Later on in our development, this was I think 2018. We brought in Nick Majuli. Nick has grown into our chief operating officer. We brought him on as a data scientist, and it was like a leap of faith because we really didn't know what we needed him for. And now the machine doesn't run without him. He is greasing the wheels and making sure that everything runs smoothly. So we track our data, we track our metrics really closely. We know what's going on inside of the business. And one of the things that we track is client service associate per household. And we never want to get in the red line, right? It goes up, and every time it gets to like the yellow, we hire somebody and then we bring that level back to parity. So if you go back to the beginning when it was just Erica, we are in a 50% drawdown in a good way, meaning like we so overworked her unintentionally just because she was so incredibly good at her job that it became unwieldy. But so I say all that to say that this is obvious and cliche, and it's true. There is nothing more important than the people that you work with. Like nothing at all. And our business, any successful business, it's nothing but problems. It is nothing but problems. Right. Some week there are more, some week there are less, some week there are more serious problems. But all that, if you're growing, you will be putting out fires or smoke. And so that's one of the things that we've done really well. And we say our like mantra for this is, if it's not an obvious yes, it's a no. And that is not lip service. We really believe that, to the point that anybody that we hire. So a lot of these things are lessons that we've learned over time. Holy shit, we're never doing that again. Right. And we've made a million mistakes. Some we've repeated, but we try not to repeat them too many times. So being that we know that people is the most important thing, a lot of the lessons we learned during the Zoom era, where you were hiring people remotely, you were hiring them over Zoom without meeting them. They were on an island by themselves, not working with other people, and mistakes were made. So we quickly corrected that, because letting people go is it's not fun. It's extremely distracting and destructive. And we have 60 people. But it doesn't matter if this is the person on the lowest rung of the totem pole. And we had to let somebody go who was in that position, and it's toxic, and it's a lot of mental brain damage, and it just takes up a lot of mental real estate. So we said, okay, we're not going to bat 100% or 1,000% if we're using batting averages. It's just not going to happen. We're realistic. but we want to do everything that we can to control that, because there are things that you learn about somebody in person, on the couch, at the dinner table, at a bar, that you can't otherwise learn. And so everybody that we hire has to come to our office and spend a couple of days with us. And we thought that was money well spent, even if it's whatever it is, I don't know, a couple $1,000s to put them up and host them. We've had experiences where we brought people on, or we brought people to New York, and it was the best money that we spent, especially if it didn't work out. Listen, if by the time we bring somebody to New York, that's not a second meeting, right? They've spoken to myself and Chris. So we speak to advisors first, because it's not that everybody here isn't important, but our advisors are, those are my clients. So I'm not an advisor.
Right.
Our advisors are my clients. And we've spent the last 10 years building up trust, building up goodwill. I think we have 25 advisors, and I've hired all of them. And I've spoken to, I don't want to throw out a dumb number, I don't know, 500, maybe more. And it would have been very, very, very easy for me to hire a lot more than we do. But when we say it's not an obvious yes, it's a no, we mean it, because the trust and goodwill that I've built up with my advisors over the last 10 years, that's something that I've earned. I don't take it for granted. It's fragile. It's sensitive. It's delicate. And that could be shattered in 2 seconds. And I don't want them side-eyeing a new fish that we let into the fish tank. We want everybody to be excited about whoever we're bringing into the family, because we have a really special thing here and we want to preserve that.
I want to talk about that, because so to your point, it's like, so there's a bandwidth constraint. You were doing everything on day one. So the obvious thing is, okay, there's a lot going on. We need to hire people, but there's a message you're putting out into the world that is creating that cultural alignment that you're speaking to. There's also a process, right? What you guys, it sounded like, kind of learned along the way is, how do you interact with those advisors? What meetings are you having when? What is the customer service model when that advisor plugs into the business, and sort of the roadmap that they get when they join? Because then at least, so having that sort of cultural alignment and a process, those are the benchmarks you're speaking to. When that person joins, whoever it is, whether it's a new advisor or a new person on the rest of the team, you have something to judge them on. Do they fit that mold, and can they stick to a process that's defined? But jump back, I want to kind of, and Kelsey, maybe I think you'll go deeper on sort of that cultural vision to values idea we talk so much about on episodes. But is there any moment, Michael, you can point back to that you guys really specifically had that realization, like, oh no, and you're speaking to like that initial team member you had who was totally fried from a bandwidth standpoint? But at what point was it like, it's not just I need to hire more people, it's I need to institutionalize these processes, this org chart, this meeting cadence internally. The service model is too random, where we do too many random different things with clients. Like, take us into those meetings. Like, you guys, I would imagine, are having those moments in that history you're speaking to where you're going, okay, we got to fix again that, and that specifically.
So many examples of that. I think 2020 was a really prime use case for that, for what we're talking about. Netflix, in their earnings report, has a really great chart where they show new members by month for every year. So, and it's cumulatively added. So the numbers go up and to the right. And then there's a giant outlier, which was 2020. And 2020 pulled forward a lot of business for a lot of businesses. We were no exception. I don't know how much money we added organically in 2020. It could have been $400, $500 million. And we did not have the chassis for that. And we almost broke. And so we overcorrected for that. And we hired too quickly. And then we had to correct for that. So there have been certainly holy shit moments. Others are more gradual. In 2020, what year is it? Oh my God. In 2022, Chris and I were taking a walk, and we were talking about how the business has really outgrown our ability to continue to do everything. And by that point, we already had people that were doing, taking a lot of stuff off our plate. But what we really needed was somebody who was in charge of the day to day, because there was just, between myself and Josh and Chris, there was gaps and things were falling through the cracks. And so we were very fortunate to hire the perfect person for this, really the only person that we would have trusted with this role to come in and effectively take over, which was Jay Tinney, a guy from Vanguard who had covered us for a decade, also happened to grow up with my partner, Chris. And he started in January of 2023. And it's hard to imagine like life before him. And we are a fundamentally different firm. I shouldn't say fundamentally. Things operate differently today for the better than they did before. So Josh and I were at T3 with you, Zach, and our executive committee was meeting in New York. And to be able to see that happening completely without us, like, definitely, it just gave us really great feelings. Like we're a business and things are happening completely independent of us.
It's funny. I remember, so at T3, I asked you guys had made an acquisition of a robo platform. I'm like, how's your day to day? You must be pretty crushed trying to deal with that and everything else that you have on your plate. And you're like, no, we put the right people in the right seats and now have capacity to do things like that and a bunch of other things and run the business. But Kelsey, maybe pivot us over to sort of that cultural side of, we talk a lot about like how you are attracting the talent, right? Why people want to come work for you and with you. But yeah, Kelsey, maybe go in that direction.
Well, if you don't mind, one thing I wanted to just drill down on a little bit is you've talked a lot about, Erica being, I think you said the first hire. And then even with this last example of Jay being hired, and that's a huge role that you're bringing someone in for. And I'm assuming
Huge.
Yeah, like I read an article about it, and even just seeing the quotes from everybody in the article before this podcast that we're recording now, I was like, wow, that's a big move for you guys to make. So maybe you could talk about not necessarily the vetting part, but more bringing him on and the trust building process. Because even advisors at a smaller scale that I work with day to day, when they bring on a new hire, I do see that struggle of, did I hire the right person? Can I trust this person? And that gradual like handing over of the reins to an operator, basically, or they're hoping they're going to be their operator so that they can kind of focus on going and being an advisor. So maybe you could talk about that a little bit with the Jay example or any other example or advice you could give.
Yeah. So we had to make sure that we brought him in with training wheels, but also with authority. And that was like a balancing act, right? He couldn't come in and be the boss on day one. So he has done, I can't speak highly enough of the way that he has acclimated himself into the role. And of course there have been hiccups and issues, and we, nothing that we couldn't fix and nothing that we didn't anticipate. And I think that I don't know, like if we were just searching for somebody, I don't know that I could tell you like the attributes that we were looking for. I don't know that we would have hired anybody external other than him, because it's such a big responsibility. By the time we hired him, we probably already had 45 employees, and he's just, I know I'm not giving you really much of an answer here. He's just done an incredible job. So maybe more like a more direct question to help me give you a better answer.
So like we talk a lot, even at Seeds, we talk a lot about kind of like a calibration period. So when you're bringing somebody on and you're expecting them to really help you reach that next level of growth or make that next step by freeing something up, whether it's like mental capacity, time, especially with Zach, we've talked a lot about this. So we want Zach to be spending most of his time doing the things he's best at, and we're trying to absorb everything else. And there's kind of this calibration period that happens where like the leader who's doing it today has to feel confident to hand over the reins, and the person taking over has to have buy-in from everybody else, including the leader, to take it. So I guess if you could give any tips or anything that you've seen over the years, or even with Jay specifically, that has helped you kind of do that calibration. Is it just getting in the room and having those tough conversations and working through it as you go? Or is there any other like strategy that you've seen and have used that's been successful? as they're onboarding, I guess, is specifically what I'm asking about.
Yeah, I think one of the most important roles of a leader is empathy.
Mm-hmm.
And knowing a lot of this is, I don't know what other word to use than politics in the business setting, where not everybody is the same.
Mm-hmm.
And I don't just mean in terms of like hierarchy. I just mean people are different, and certain people can hear. I'll give you a great example. Like, certain people are incapable of being praised, because they will then use that praise and weaponize it and say, I want more responsibility, or I want a bigger title, or I want more money. And it's like, whoa. And so you have to learn that there are certain people that like can take praise publicly and like get fired up, and others who just are incapable of that. And that is something that you can't know on day one, but it's a really, really important skill to see the room, to know who has the ability to take praise, to take criticism, to really run with the ball. Like, having those interpersonal skills is as important as all of the like organizational skills and whatever, and leadership and charisma. Like, I think knowing who's working for you is incredibly, incredibly important.
Mm-hmm.
Michael, how do you do that? Like, so Kelsey and I talk about, so in the seeds business, as she just said, basically the more I can be removed from the day to day and allow the team to just operate and do what they're really good at, the better, right? That's what I should be empowering them to do. I want to go do what I'm good at and run the business and from sort of the bigger picture perspective, but not the day to day. Anything you could share, just sort of how do you create that culture and that sort of one-on-one engagement? Because to your point, you have to sort of suss that out with all the employees. Everybody thinks differently. So is there sort of like an internal meeting process, or you're doing one-on-one sessions to understand, are people meeting their benchmarks? What are their issues? Because you sense it because you're walking up and down the office hallways together. But at the end of the day, the ability to kind of maintain the culture, have everybody be happy, have everybody be successful. That's what, like, again, that's the main part of my job, right? Is just motivating and helping everybody else succeed. But I do it with a specific process. Again, I'm just curious sort of what you guys do internally, if you have a system like that to have those specific conversations.
So we have, there's a million systems that we have in place, like internally. So how do you, it all goes back to hiring the right people, because I'll give you an example. If you have somebody who is in charge of the CSA group, and we do, and she's great. And if you want to empower that person to oversee who they add to their team, you have to give them that ability. However, what happens in a situation where they find somebody that they like, they bring them to you, and immediately you're like, no, this person's not going to work here. Well, you can't say that to them. And so it's delicate. You have to learn that how to deliver a message to somebody, and it's not the same for everybody. You could treat everybody equally, but it doesn't mean you have to treat them the same, right? Because we're all individuals. And so it's constant. Zach, I know you know this leading seeds. This is it never stops. It never goes away, right? Like, you go home and you spend time with your family and your friends, and maybe you have a day or two on the weekends, and then you're right back in it. Yeah. So there's a lot less that I do today than I did a year ago. And 2 years before that, I hired Sean, our research associate, who is helping me with investment stuff, with tech stuff, just helping me stay a little bit more organized. You have to know when you need to hire somebody, and you have to get good at hiring. And how do you attract people? I think what we do pretty uniquely well is we put ourselves out into the world, and I think that we attract good people. And so that's been our strategy.
I was going to ask about that, Michael, because again, like I would say our industry peers, as I said at the beginning, they know you guys through the lens of the media stuff you're doing. Josh on CNBC, you guys on social media, the podcasts, etc. And so I am curious of like, you get people, is there any like calibration that needs to happen in the hiring process where somebody walks in the door and they're like, hey, we're super fans of the podcast, and you have to get to, yeah, that's awesome, but like, here's what we do at Ritholtz and here's how our business works. Like, how does that typically go? You know, because again, people kind of see what they see in the media. I'm curious. And by the way, I'm also curious, I don't know if you could maybe speak to this as well, that from a client perspective too, right? I've always been fascinated by your followers as a business, again, whether it's talent or your customer, that's how they know you generally. So that conversion process, like what that conversation looks like with that person who walks in the door to be hired, or that first client meeting where it's like, yeah, I follow, you on your podcast, or I watch Josh on CNBC. Like, because you have that such a significant footprint, which is obviously super powerful to get people in the door, but do you have to like, I don't know if course correct is the right way to say it, but sort of like recalibrate how they're thinking of the business, if that makes sense?
In terms of the client or the advisor?
I guess start with the advisor. So the advisor who's looking to join you guys, or just a team member, somebody who the CSA is looking to hire, somebody, and they're walking into the interview, is like, what is their perspective of what Ritholtz is? And is it, again, tainted isn't the right word, but is it shaped by your media presence? And then the interview process, either again with advisors or with, other team members, you have to kind of like have that conversation.
All right. So I'll get to the advisors, but before I do, I'll give you a tangible example of a course correction that we made. We had hired, so our advisors have come to us. Our first advisor hire came to us with $0. So our first advisor outside of Chris, when we started, Chris's calendar was literally back to back to back for like 3 years. When did we hire Alex? 2014, I think. Alex was a kid. He came to us from Voya, the insurance company, 0 assets. And Alex sat with Chris for 6 months and absorbed everything that Chris was saying to our prospects. And we took Alex from $0 as a 25-year-old to close to $300 million. He's now, I guess, in his young 30s. And we've done that, not from 0 to 300, but we've done 30 to 300. We've done 20 to 250. We've done 40 to 250. We've done that a lot. And our advisors ultimately got to a point where they're full, right? They can't take on any more relationships because they're too busy. And so before that happened, we started thinking about how do we get them support staff. And so we thought about power planners. And for us, that had turned out to be not a great solution, because our advisors, now I'm not speaking for the industry, I'm speaking for us specifically. Our advisors are so busy that it's really difficult for them to slow down and train a kid who really doesn't know the first thing about our industry, our process, investments, planning, software. It's a lot. And because our advisors are growing so quickly and having so much fun and succeeding and all that sort of stuff, it's hard to keep a power planner in that role for too long, even if they should be in that role for 3 to 5 years because they're a kid. They just get maybe out over their heels in terms of their ambition, and they want more responsibility, and they want to make more money, and they want a bigger career path, and they want it faster and more and more. And so we said, hey, wait a minute. It's not going great. It's just not going great. There are so many advisors that I speak to that are closer to my age, that are more service oriented. They're not great salespeople, but they love the client advisor relationship, and they want to be more of the support person than the person who's really selling. And so what if we could bring on those people and maybe give them a more permanent seat as what we're calling a co-pilot? And so this way you could extend the advisor's runway, and instead of having a capacity of 80 households, maybe they could work with 110 households. And we found that to be a much more effective solution for scaling our advisors' capacity. So that's one course corrective measure that we took. Another one is just a good example of our life cycle, the way that it works with advisors. Our industry is incredibly competitive. If you have $100 million and you're an advisor near anything resembling a major metropolitan city, you are getting cold called and you are being offered really attractive packages, guaranteed comp, equity, a signing bonus. It is absurd, quite frankly. But that's the world that we live in. I can't do anything about that. And so attracting advisors is challenging. It's competitive. And at over $4 billion, even if we're adding $300 million organically a year, well, 300 million on 4 billion is a lot different than 300 million on a billion or 2 billion, right? Your rate of growth slows. So the only way that we can really sustain our growth rate is we need to add advisors. The challenge is we're not writing checks. We have an incredible offering. We have an incredible team, an incredible culture. We don't ask the advisor to prospect, right? We have leads that come in because they're fans and we assign them. And this is a great place to work. But we're not giving you a check. And so this isn't financially the most attractive place to work in the industry. So it takes a special person to say, I don't need a check. I'm there because you guys have built something really special. And we take them through the process. And as I mentioned, the engine, like what we actually do matches our content in terms of its firepower. We've got an incredible business, incredible tech, incredible software, all that sort of stuff. So it would be very easy for us to relax our standards. Right. But the minute you do that, everything that I've worked so hard for in terms of building the culture, and culture is hard to define, but maybe an easy definition is like, what do people do when nobody's watching them? As maybe I'll just throw out one idea. We want the advisors that we hired, like they're our representatives to the public. And we want to make sure that our fans are well taken care of, regardless of who they're talking to here. We want them to have the similar outcome, which is the successful one. So as we're talking to advisors, like I said, it'll be very easy for us to relax our standards, but it's still 1 out of 10 or whatever the number is. And I'd love for it to be 4 out of 10 or 7 out of 10 that come in here that we talk to that become employees here, but it's hard. A lot of things have to go right. I mean, obviously personality first and foremost, like my personal metric for, do I want to work with somebody? And you know it pretty quickly. Now, sometimes somebody comes off incredibly well and they're kind of tricking you. And that's happened before too. But generally, if somebody's not a great fit, unfortunately, you know it in 2 seconds. And that's never fun telling somebody that, but I've gotten pretty okay at that. But a lot of things need to go right. A lot of things need to go right for this to work. So yeah, I guess I'm rambling here, but what I'm trying to say is that adding advisors is a challenge, and adding quality advisors, we're not going to compromise on. If our growth rate has to slow, that's fine. I'd rather that than dilute the talent that we brought in here. So back in the day, a $30 million advisor would have been economically fantastic for us. Our cost structure has changed dramatically, right? We don't have unlimited capacity and resources, not just financially, but time to divert our attention away from our day-to-day, which is incredibly busy, stop everything we're doing and onboard a new advisor. It's expensive, it's time that it's consuming. And then also the leads that we get are finite, right? Whether it's 20 leads a week or 50, whatever the number is, that's the pie, right? And every advisor that we add is taking another slice of the pie. And so we have to be respectful of the advisors that we've hired, and we owe it to them to make sure that anybody that we're bringing in here to share in what we've built is of the caliber. And so I've given the advisors my word that the minute we start to bring on advisors that you think are not up to the level, they'll let me know pretty quickly. And it's not going to happen. It's just not going to happen.
You're hitting on, Michael, the again, the whole premise of the podcast and what Kelsey and I talk about day in and day out, which is sort of this self-fulfilling prophecy that we can create as firms by having a culture. And I would say the culture is defined by the message, and this is going to sound woo-woo, but the sort of the vibe you're putting out into the world as a business, right? And because who you attract is then defined by that, who walks in your door. The cultural killer, so growth for the sake of growth, as you're talking about, anybody can write a check or you can figure out how to write a check to bring in an advisor and grow, add money to top line, but it kills culture, right? The fact that you're bringing people in who start with zero, but then you've established a process and a culture to cultivate them so that they can grow and have that alignment with them forever is really that calibration we talk about. You're getting so many things right. There's so many silver bullets, right? You can create, pull in leads that are the wrong, you can pay for leads, and those leads are the wrong leads that don't fit the persona of the customer you want to actually serve. You can pull in advisors who don't, fit your culture. And so those things work in the short term, but it's really about that long-term plan. And I want to point out, again, back to your origin story. I was listening to it last night. You talk about, it's like a Hollywood script. You literally bumped into Josh Brown on a train platform, but you needed to have a conversation with him. You were following him on Twitter, I think at the time. And that's why you wanted to go work there, right? There are human people at the company that you believe in and that inspire you and that talk about things that interest you. Without that, you're just another RIA, right? Or any business. You're just another firm.
Everybody here is a fan.
Right.
Everybody that works here is a fan. And I've got 25 advisors here. No advisor that we've hired that brought over a book of business has ever not stayed. And so that is, the proof is in the pudding in terms of what I told you about if it's not an obvious yes, it's not being lip service. And I distracted myself, but to finish the thought that I had earlier was my personal metric for hiring somebody is I never want to look at Slack and say, oh, what does this person want? Life is too short. I am way too busy. That is my line. Like, my life is not going to change by adding another advisor here. And we could easily, if we did things differently, we could easily be $20 billion, but we have no interest in growth for the sake of growth. I very much value my sanity and my lifestyle and working with great people, and that's never going to change.
And Michael, to that, Kelsey, go ahead.
Oh no, I just wanted to mention something. So I can just feel it from you right now. I heard this quote one time that was like, if you want to hire better people, be better, have higher standards, because good people, like A players, the best hires, they don't want to work with someone or for someone who they don't respect. And so I think what's coming through for me in this, and a lot of advisors, I think there is this idea of I just need to grow. So I just need to hire someone and bring somebody in really fast because I need to get this off my plate. And I think what you're kind of showing, even just in how you talk about this, with deep respect for the clients, deep respect for the advisors you've already hired, deep respect for your partners and everybody else you've brought into this with you. I think it just speaks volumes about that idea of if you want to build something excellent, you have to be excellent. You have to hold yourself to the highest standard. And I think it comes through so strongly. I'm getting so excited.
Thank you. There's nothing that I'm more passionate about than, outside of my friends and my family, forget about my friends, than the business. And it's taken us 10 years.
Yeah.
And I really feel like we are now just finding our footing. Maybe not finding our footing. We are finally hitting escape velocity. And I was listening to Patrick O'Shaughnessy on a podcast with Mike Ovitz, the founder of CAA, the giant agent mogul. And he said that he's I don't know why I've seen thousands of businesses and it's 10 years. That's the number. And I felt like hallelujah when I heard that, because that's one of the things that when's it could happen? When I say I don't know, just wherever we're trying to go. And I feel like we're finally there. It took 10 years and our foundation is solid and we are ready for growth in the right way.
And Michael, we talk a lot about feeling like purposeful in trying to lead these businesses. And because again, everything's sort of like a feedback loop, self-fulfilling prophecy. Now that you guys internally feel the way that you feel, and it's not you doing billing, you look back 10 years ago and you're running around the office trying to figure stuff out. It only means that now you guys can do even more. You are feeling inspired that you have all these talented people. I now in Seeds get to wake up every day, even way earlier stage than what you guys have done, but have people like Kelsey and the rest of the team members and not get those Slack messages where I'm going, oh no, this is some nightmare I have to deal with. I have confidence in the team. And it's so inspiring that I can go focus on the bigger picture. And that's only going to make Seeds more successful. And obviously what you guys are doing at Ritholtz even more successful. So
we only have
pretty cool.
Well,
go ahead, Michael.
Just as we're getting ready to wrap, Zach, the reason why I invested in you guys was because of you and Peter. I felt so strongly about your character, your mission, what you were seeing, what you were building. So if you guys weren't you guys, I would not have invested.
I appreciate that.
That's why I work here.
Yeah, it's as I say, it's the most important part of the job is the people. Michael, we'll get you out of here in a second. Last thing we want to do is just go around the horn. We always try to close with anything not on this topic or not on this topic that you might be excited about or sort of learning about, right now. But Kelsey, if you want to kick us off on that.
I'll kick it off and I'll keep it short because I'm super pumped about this. And I don't want to go too far because we don't plug Seeds on this podcast very much, but we have some amazing product updates coming out in the next month or so that we've been working so hard on. And we're starting to finally communicate about them to our audience and to our customers. So I've been having a lot of meetings with customers talking about the roadmap and they're getting super excited. So I'm not learning about it, but I'm super pumped about it to be sharing it with them and getting the feedback and hearing that it is what they expect from us and that it's meeting their expectations for what they think we should be delivering. So super jazzed about that. What about you, Michael?
I am very excited about the Vision Pro from Apple.
Yeah.
I understand all the pushback. Like I'm not going to be walking down my street with goggles on. My wife would kill me. But for where this is going, and like I am tempted to buy a pair. I have to be honest. Like I'm going on an airplane tomorrow, and I would love to be able to watch a movie on a 100-foot screen on the airplane. So I don't know if I'm going to pull the trigger, but I'm very excited about where this is going.
I am too. I think, the iteration of that, if you do it on the plane, make sure you get one of those like forward neck pillows because the main feedback I've heard is that it's like 1,000 pounds on your head. So yeah, you get like neck pain on a plane regardless. So definitely do that if you buy it. Mine's actually kind of in a similar vein, product iteration, and Kelsey, what you're talking about as well with product iteration at Seeds. The other thing that kind of keeps me going day in and day out is the customer is actually getting that feedback you're talking about and having them actually feel connected in a more meaningful way, right? We kind of are like pulling our customer behind the curtain. And I think in the advisory world in particular, like we really try to keep people out, right? We don't want to like show them how we're growing and how we're iterating and moving the product forward as advisors or in a startup. And I've realized in Seeds how motivating that is. And by the way, how excited the actual customer gets about that. And they want to be involved. They want to provide feedback. They want to see us succeed. And it's amazing. And Michael, I would imagine that's true for you guys as well, because your customers know you so well and you bring them behind the curtain as you guys have been, building the business, over the last several years. So with that, Michael, thank you so much for joining us. We appreciate the insights. It's been a great conversation. If you haven't checked out Seeds, please go do so, www.seedsinvestor.com. You can follow us on Twitter, now X, or LinkedIn, and we will see you next time.